Okay, welcome trading moms and other fellow traders. So today I'm going to share about why I'm even more bullish on silver than I had been before I started using Elliott Wave to chart it. Just remember a disclaimer, this is not financial advice, and also Elliott Wave is not a guarantee. It's just a high probability roadmap. So that's why I position accordingly. And so I'm going to be sharing how I'm positioning, when I'm positioning, all that stuff with silver, and what not only the chart is telling me, but what the macro environment is telling me, because I am a trader that looks at both things. So right here, this chart shows us that silver is setting up for a textbook Elliott Wave move, and this is the moment to pay attention. So as I have mentioned before, Elliott Wave has larger time frame cycles, and so we have the super cycle count on this diagram, as well as a shorter time frame. So we completed the wave 5 at $120, and we've been in a correction. I think we could potentially be about to finish the correction of wave 2. I started adding at $72, but as you can see, it could go down to $50. And I think within this correction of wave 2, we're probably in, I thought we were potentially in an ABC correction where B would go to 83 to 89 and then fail, probably closer to the $60 to $56, $65 range before bottoming and then going into wave 3. But there's no like magical alert with Elliott Wave that says, hey, buy today, this is the low, this is 100% the wave that we're in. So I'm adding also some from my long, just in case this is the end of wave 2 and we're about to start wave 3. But I think we're still going to be finishing up the wave 2, and then you can see we have different waves within wave 3. I do have a short-term target of 83 to 89, and then after that it gets a little higher. Wave 5 is when I would see the 115 to 150 price target. So this is the trend, and I am not as bullish as what Elliott Wave maps actually show. I'm looking for, 130 to 150 is actually my top target. I don't really see 357, but I will be holding until 150. Again, there's no guarantee it will hit 150. That's why you size with conviction, and that's why I also do a combination of swing and long. All right, so the current price when I made this yesterday was 75, but now it had dipped down to the 72 area, which is where I bought. There could be a deeper flush, and then I do see an 83 to 89 price target in the shorter term, and then a correction again before another target of 98. And then finally, I do see a 150 to 180 price target in wave 5. So I'd rather make less than risk more. So this is why I kind of scale in. I don't necessarily know if we're at the bottom now or when the bottom's going to be, but I do know we are somewhere in wave 2, and the bottom will happen faster than we can blink our eyes. It's going to take us by surprise. There's nobody going to wave a flag and say, hey, the bottom of wave 2 is in. But wave 3 is the most powerful wave, so you want to get in before wave 3. So the chart is bullish on silver. The macro is also bullish on silver. I look at both. I want them to agree if I'm going to take a 2% position. If I only see one looking good, I'll maybe take a much smaller position, not even a 1%. So they both look good. That's when I go in the 2% of my portfolio. So in addition to a supply deficit that silver was already experiencing, on April 10th, China announced it was going to halt sulfuric acid exports. And why does silver care? Because silver is a byproduct of base metal mining, right? So this is going to tighten the silver supply that was already in a deficit. Silver has been in a structural deficit for 5 consecutive years, right? So we were already drawing down inventories before this ban. And so for me, this means I don't know what's happening in the short term, but if this ban holds up, because politicians and governments can decide to do something different and change their minds. But if this band holds, this will be even more bullish for silver, and maybe that's where we could see potentially like a 180 to 300 something dollar price target, which again is not my price target. And so some Elliott waves ignore fundamentals, but I think it's a mistake. I like the chart and the macro to match up, and then I can take my 2% stake. I actually have 4% in my swing account that is set aside because I haven't employed all of it. And that's just because maybe, I have about 2% of that used now, but maybe there's a bigger drawdown, right? So I want to be able to add on that dip. But I want to be able to start, so I started USAS at 527. I added a little bit today in the 560s. If it goes down to like in the 4s tomorrow, I'll add then. At some point, you got to stop. You use all your capital. You quit adding. And you just let it ride. And you just exercise some patience, right? Because this can take months. And as you saw on that super cycle chart, those really big price targets are not happening until like 2027. So we're not there right now. So the stocks that I really like, USAS, Hecla Mining. I have a smaller position on this just because it's already run up so much this year. I have Solitario Resources, which is mostly like copper and rhenium exploratory mining stock, but they're like in the explorer phase, so very small position. And so this is my silver basket. So America Gold and Silver, I have started a position that I started at, I just said, at 527, added a little bit today around 560, maybe it was 559. I would really like to employ a larger position in my long account and my swing account in the 427 to 498 zone. And then I'm targeting $11. And then I'll leave some in my long for 20 and maybe even higher for when silver hits 150. I'll probably start selling most of my shares before around 150. And if it goes to 300, hey, I had a good run. Maybe I'll leave just like a small, tiny position to see what it does. And then Solitario Resources is my most speculative miner position, mostly because copper, obviously there's a demand for copper. There's a huge demand for rhenium, but it's very speculative. Only 15% of explorers succeed. So size accordingly. I entered at 73 cents. My target is 120 in my swing. And then I have some that I'm holding for potentially $3 if they get bought out. Like by Newmont or something. Hecla Medium is my medium conviction. I kind of started adding today, but it's again a smaller position because it already ran. And then Nexa, I'm very bullish on this stock, but I kind of missed it. And I don't want to enter right now. If it were to go back to the $8 range, maybe $9 range, I would add. If not, congratulations to all the Nexa Resources investors. They're doing really well. And so I started scaling in today at 72. If it goes into the 60s, I'll add some more. I'll reserve in case there's a $50 flush. I'm going to sell my swing 89 to 95. But you got to watch the 83 mark. If it doesn't hold 83, it's not going to go to 89. It's going to fail. And so once it gets into the 80s, I'm going to set my sell order or my stop loss, probably like at 81, 82. So I do get some of those profits. Long account, I have SLV in there, USAS, HL, Solitario. Just going to hold through my price targets. I'm going to trim my miners if USAS hits 11. And then really sell most of it around 20 if it goes there. And then fully out of all my silver trades at 150 to 181. So swing account versus long account. This is something I want to talk about. I think it's really important to have both because psychology is a huge part of trading. And so this is my strategy for staying disciplined. I have a long account for my high conviction trades, the stocks that I'm like, yes, I have this thesis about why I like them. And then I can just forget about them, hold through the corrections because the stock market will take you on a roller coaster, which, Elliott Wave kind of does look like a roller coaster. So you get what I'm saying. So I can buy on those dips if I have that capital to buy. I'm holding USAS, XPL, a little bit of SLV and a little bit of HL. Looking to add Nexa. I'm targeting the full super cycle wave 3 move, 150 higher, maybe 181 to 357, but scaling out. Then my swing account is a very active management. So the swing, I'm looking for it to go to 89 to 95. I would take full profits at 89 if it hit, but if it doesn't hold 83, I'm going to get out. So you have to kind of be on top of those. Unless you get you're sure, okay, this is the bottom of wave 2. So you wait for the correction, you reload in this zone. Wave 2 is the load zone. And then full exit I'm going to hold some of my swing account long. I'll just scale out a little bit. I'll probably sell 90% if it gets to 89, but I'm going to keep 10%, and just keeping a little bit is how I take profits as I go up, but also helps me avoid FOMO. What if it keeps going up? And that's really how you stay disciplined. And the key takeaways, super cycle count shows wave 2 is completing the B leg, or maybe we're in a W, XY, which is just a messier wave 2 correction with, instead of 3 corrective bounces or waves down, it's 7 waves or 11 waves. It's just a little messier. But it's pretty, it looks pretty clear we're in wave 2. And then we have China's sulfuric acid ban, its structural supply shock for copper, which directly tightens silver supply since it's byproduct. Silver has been in deficit for 5 consecutive years. That's like a alarm bell. Hey, this is probably a pretty good opportunity. But you want to use both charts and fundamentals. Even though we're bullish on silver, imagine if you bought at 120 or even 110. When they agree on the same entry, that's when you size with conviction. Risk management first. So I'm going to scale in, sell that 83 to 89, add hopefully in the 60s, possibly even $50. Or once the start of wave 3 is confirmed, hey, wave 2 is done. Now we're going to keep a reserve though, just in case. And so the swing account, you have your exits at different targets. And the super cycle, we're seeing I think 150, but the chart's saying higher. But again, those charts change. So we'll have to see what happens. They change from one day to the next. And so these are my 2 things I just want to really share that's helped me be successful and not lose a ton of money and actually beat the market. Is size your position to match your conviction, not your excitement, right? So if you're going to day trade, you don't have time to research the stock. I never put more than $100 towards a day trade. And then again, I usually never go more than 2% in my long account. In a swing account, I might do 4% so I can scale out at different price targets. But again, only if I have a really high conviction. I have a chart and I have a macro that seem to line up. I'd rather make less than risk more, and I size up when I have more confidence. And then I also sell early, right? I would rather not lose my profit. So if I know I'm in wave 5 and wave 5 could potentially extend, I have to be comfortable with the fact that I might not get 100% of the profit. It might go up another $20, $30 or something. In the case of silver, if I sell at 150, it could go into the 300. I would rather make less than risk more, or maybe if I can adjust my stop. So just keep that in mind, that it's about, making high probability trades, entering at the right time, and not being greedy. You got to manage your risk and manage your psychology and your emotions.